Hey, what's up guys? This is Mario from RKDA, and today I'm going to teach you guys how to short sell a parabolic move on a stock that has gone up 100%, 200%, or even in this case 300% the prior day. And we're talking about RKDA. Now, let's get started. So, something that I talked about the other day about RKDA that was very, very important to understand is T plus 2. So again, one of the main reasons why he had this humongous 300% move yesterday on March 14 was because of T plus 2. Again, short sellers got short big on March 12, and they held and they were swing trading it and were holding it for 2-3 days. Because again, as a T plus 2, what that means is that when the day you short, you have the day you short plus 2 days to cover. So technically, you have 3 days. So on the third day, you have to cover, and you don't cover by the third day, your broker will automatically cover you. So, and you get a margin call and do cover you. So very, very important to understand because again, when people, when short sellers shorted on the 12th and they didn't cover on the 13th, and then they got squeezed out on the 14th, they were forced to cover. You know, regardless of if they were up, they lost money, does not matter. They're forced to cover and their brokers covers them. So that's the reason why you have this humongous momentum move. Plus you got momentum traders coming in to buy those dips and squeeze out those shorts even further. But there are correct indicators. You know, there are indicators to look at before you decide to short sell a stock like RKDA, because it's a very, very low float. Again, 500,000 shares, very low supply. So this could be an easy squeeze. So very, very important to look at these indicators before you decide to even think about shorting. Number one indicator, again, after the parabolic move, you want to look to see, and on the following day, there is some sort of gap up or a move pre-market or even after hours or pre-market to kind of exhaust all those longs or even short sellers who are still covering, to kind of take them out. You know, get all those short sellers out, all those longs out, and have that gap up as a way for all the ones who are long, maybe between 45 or 50, to start selling on that gap up. So, and the other thing you have to keep in mind that because RKDA is such a low float and it moves so much, any such move, big move on RKDA could cause a halt, especially if it moves very fast. So you have a little bit of an edge. So the number one edge is a gap up, which happened actually today, and that's where you saw a humongous sell-off. So there was a gap up because, again, the stock yesterday closed around 48.36, and today it opened at 58.01. So there's a huge gap up. So that's number one. Two, you got to keep in mind that if there's a gap up, again, you also have an edge that the stock could be halted. So if it is halted, there could be a humongous sell-off. So if you are short on a halt, especially after a gap up, you have the edge that you are going to be profitable. You have that edge on your side that you're going to be profitable. So let's take a look at the gap up. So, and I'm going to take out the elbow because it's messing up the view. All right. So again, yesterday, humongous move, RKDA up 300%. And it closed around 43.68, and then you saw a humongous move. You know, actually pre-market, you saw dip buyers again try to dip buy it for the next move. So that kind of caused an exhaustion. So it exhausted all the longs, all the shorts got squeezed out. Any short that was still there, who was maybe short overnight, hopefully for a gap down and sell off, got squeezed out when it started to trend. So you get the last squeeze out, and then you get some sort of parabolic moves at the open. So you get a parabolic move in the first green candle. Now this is a $8 move, so in 1 minute $8 is a lot actually. But then you see some stuffs. You know, you see this huge red candle right here. So that means longs are taking profits. All the longs who bought at the close, waiting for a gap up, are taking their profits at the open. So you have longs with short sellers, new short sellers. So now all the short sellers, they got margin call on T plus 2 who had a cover on the 14th, now they're shorting again. So this is T plus 1. So this is day 1. So they go hold short. So they don't have to worry about covering because it's a new cycle, I guess, of T plus 2. So now you have all the longs selling to take their profits on the gap up because they bought at the close. And then you have all the new short sellers on T starting a new cycle of T plus 2. You're getting short, and then you have these sell-offs. And then now you have a sell-offs attacking the VWAP. So anything below the VWAP is showing weakness. So this is where a lot of traders and short sellers take advantage because, again, there's a huge exhaustion move on the gap up. All the short sellers are covering, all the longs and are all exhausted. And then on the gap up and the parabolic move at the open, the strong open, all the longs are taking the profits, and a new short seller are coming in, piling in to short sell the stock. So then you see the sell-offs, which are huge. These are like $8 moves, and then you see every single pop on the VWAP it gets shorted. So you see that, short sellers start open positions on the parabolic move at the open. They cover in the dips, short again on any pop to the VWAP. Cover any dips, again short the VWAP again, cover any dips, and any trend below this, and if you see this break right here, is another break that a lot of these short sellers took advantage of. So you see this little trend, it broke out of this line right here, again shorted right here, covering those dips, and this actually top held. So that's pretty much the move. So right now, I can see there are some short sellers probably holding short, swing. And as long as there is any PR news announcement or anything positive, there shouldn't be squeeze. But again, that's up to everybody, what their trading style is. But even though this was a humongous move, so anybody who's shorty at the open, short those pops at the open, did really good for themselves today. So if you guys could see, today was, if you look at it, it's a $31 range. So whoever shorted this pops, this parabolic move at the open and these pops on the VWAP did very, very good for themselves. Because again, there's a 30+ move on the downside today. So again, those are the advantages. That's what gives you the edge when shorting these low float crazy runners. That had run 100%, 200%, or in this case 300% the day before. Again, number one thing, you want to look for an exhaustion gap. An exhaustion gap to kind of get rid of all those shorts who are still short, and or any of the longs who are still buying that trend. And then once you get that gap up at the open, it gives an opportunity for all the longs who bought at the close the day before to sell, take their profits. And then you got new short sellers start a new cycle T plus 2, getting in short, and then you get the volume pressure on the downside. So hopefully this made sense, guys. I know when it comes down to trading, the most important thing is having an edge, and I did talk about having an edge in these trades. So again, it's all about the price action, the float, again, supply and demand, understanding trends, understanding what's behind the move. T plus 2 is very, very important to also understand. It gives you an edge if you understand that. So hopefully all those things made sense to you guys. Again, feel free to reach out to me. Join my free Facebook group, Investing and Trading for Entrepreneurs. Feel free to follow me on Instagram. And if you have any comments, feel free to comment this on his YouTube channel. You guys will hear from me soon. Have a good one, guys.